Good morning and happy Wednesday, traders. It is 9:02 a.m. Eastern U.S. time on the 11th of October, 2017. Thanks for joining me. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Looks like we're dropping frames here early. Um, just bear with me. If you lose the video, just reload or refresh your screen and move forward to the point where you had dropped off. The market stance this morning is really mixed. There isn't much that is moved around and away from settlement yesterday. RBOB strong again, up 1.4 cents. Um, and crude oil's up 10 cents right now. The dollar's still dragging. There isn't much to report here. The indices are just slightly off, somewhere between 0.06 and 0.09%. Nothing too significant to talk about. Today, the key thing we need to look out for is the FOMC minutes. The FOMC minutes at 2 p.m. Eastern U.S. time. FOMC minutes, and then we have Fed Speaker Williams at 2:40 p.m. And at 2:50 p.m. Eastern U.S. time, we have ECB Speaker Prate. That's pretty much it for today. We do get the U.S. JOLTS job openings for August, expecting 6.143, and that's a low tier number. It's not likely to be a mover, but pretty clear until 2 o'clock, the FOMC minutes. Let's quickly shift over and look at what we expected yesterday. Yesterday, the market was opening on the higher end of the prior day's range above value. In range above value, the expectation is the market's likely to shift down into support, which was expected at in the 25.47 to 25.45 area. And then I was looking for a rotation higher and a test of, as I circled here, a test of the measured move high of 25.53 and a half. This is not what happened. We did end up testing the 25.53 and a half, but we did it exactly as expected in plan B, which was to open. I was expecting a small open auction since we were in range. We opened strong, push to that measured move high at 25.53 and a half. We got to 25.53 and a quarter and rotate down, and then we start to get an impulse down into the point of control and hold sideways. Okay, that's pretty much what happened yesterday. As good a plan as can be. Here's what that looked like. Let me turn on flex levels. So you can see here a quick burst down, strong push up, pushes right into the measured move high, and then we get an impulse down 7.5 points, and then we consolidate. We pushed through that 25.45 support. The support region was supposed to be right here. We push through it, and then we get stuck at it for the rest of the session. Okay, several decent tests of the mid, but overall, once we impulse back into the prior day's range, we went completely sideways. We traded the value high and just got stuck there. So this was basically hypo 2. Here it is again. There's hypo 2. Excuse me one second. There's hypo 2, push up, break down, consolidate. The expectation was for a small double distribution. I expected it to rest a little bit at the high end and then spend the rest of the day in the low end, and it did not. It made a small nubbin weak high here and spent the rest of the day down below, so we never got that upper distribution as expected. But that's where we stand That's where that's what happened yesterday. Looking at the overnight session to carry our discussion forward into today, into the overnight session. The overnight session just stood sideways. Let me remove this. The overnight session just traded sideways on the Asian session, and then it started to sell off into the European session. Currently, we are stuck right in the point of control, the overnight point of control VWAP in mid area. Not much to glean from the overnight session except that the market could not get back into this upper range and moved back into the acceptance that we had yesterday, yesterday's Globex session, and Monday's session. Right? So these are all on top of each other. Last Friday, these are all on top of each other here. It's just a strong consolidation area. We did make new all-time highs as we talked about yesterday. I said this is an extremely high probability given the way it was built up on that composite profile. Remember, I drew a composite profile and I showed you that it does have the fuel underneath it, the support underneath it to push through to new all-time highs. 2553. The S&P index, I believe, is up 1.24% so far this month. So it's pretty big. This does smell a lot like the equity, the way stocks were trading during the 2000 or so bubble, tech bubble. Just to know the market's really not pricing in any risk whatsoever right now. So that takes us into today. Now, what we're expecting today, I just want to take a moment before I get into the roadmap for the day. I'm going to stop calling them hypos. I don't like that word. I want to talk a minute about context, and I got a question via my website, futurestrader71.com, about the fact that I keep talking about context, and context is just a way for someone who doesn't really understand the market to kind of just a very derogatory email. Not that the derogatory part bothers me. I know what I'm doing, and I've been doing it for a long time, and it works for me. But the idea that context is just a cop out for not having to explain what the market is really doing. And the example I thought of is that everybody wants, the easiest way, the easiest path to get somewhere from somewhere is to be dropped off at the starting point and to have an arrow pointing in the direction of your destination. So the example I have is someone is on Main Street and wants to get to Broadway Street, okay? And it's the way we look at trading is you want to be able to look up and see a convenient sign that says Main Street. And the problem with not having context is that it's great that you know where you are now, but you need to know what direction you came from and where Broadway Street is relative to where you are now. That's context. This starts to give you an idea of which direction you should be going. Maybe you won't get there in a direct way, but in the end, you will end up pushing in that direction. And that's the best you could hope for in trading, unless you want to go and spend just a lot of time testing a system and so on, and then once it's up and running, spend a lot of time tweaking that system to the current market environment. But if you don't take context into account, meaning I'm standing on Main Street and I need to get to Broadway, knowing that you're at Main Street is not the entire story. And that's what the chart shows you. This is what the current price shows you. You're here. This is where the market is. But you need to look to the left and understand how did we get here in order to understand which direction it is likely to go, which direction you need to point in order to get to Broadway. That's just an example of how to get from point A to point B, because it's not a linear process, okay? It's a ridiculous that some people are selling products out there that make you think that trading is a linear process. It is not. And so this is why we go over what we expected yesterday versus what we got. This is why we go over what we got in the overnight session. Then we discard the overnight session and start looking at what has the market done, what is it trying to do, and then based on that, we create plan A, plan B, plan C. Okay? So this is where we are. For those of you who have been around for a while, this is the process. It's not a matter of, yes, this is, it's currently trading, at 25.48, and today it's going to go here. It doesn't work that way. It's not a linear process. I have to see what the market does with the open in order to figure out what it's likely to do an hour after the open. So I can place my bet now for that outcome. Then once the initial balance is in, after the hour is in, now I have some more metrics to decide what the auction is doing based on the the initial balance, the first hour's trading, and so on and so forth. And I support that with statistics, just like I did in yesterday's webinar. Okay, so this is the process we're under. This morning, we're opening right in the thick of it, like I talked about. Here's the thick of it. This is all VPOC territory. These are all areas that the market has shown acceptance. We're going to extend this profile forward. Here we go. We can see the point of control is very much in the center of this range. We have balance at the high here. Let me expand the scale out because it's really tight. It is very tight trading, and it's just really it's really a matter of the market finally letting go or continuing to push highs and revert back to them. So this morning, I expect an open auction. We're opening right in the thick of trading, of the trading range right now of acceptance, down to 25.46, expecting sideways, and then I'm looking for the market to start making a move towards that high and then to finish somewhere in this range. I'm not looking for a big move out of here today. I don't see a reason for the market. I don't see a reason for the market to go crazy from here. Okay, and so this is what we've got. This is the primary hypothesis. Now, the better plan is for the market to open up, push up, fail, push through to the 25.46, consolidate, and fall through. Now we have pretty decent resistance. We're looking for a mid versus point of control setup. Look for the extension. Look for a test of this area down here. Oops, that's a bad line. This area down here, and then a bounce later in the afternoon. I'm looking for the market to test the other side. So what we did yesterday is we tested the above the range, above the MC point of control, or the MC, the micro composite we have. I'm looking for today to test below the micro composite. Today can move as far down as 25.36 before the bounce back up into the close that we often see. This is hypo 2. Okay. Those of you who attended yesterday's webinar, if you requested the PDF of the Russell statistics, it should have been sent to you. I believe it sends you a message with a button, and you click on it, and it'll download the PDF for you. Those of you who did not attend the webinar, it'll be posted shortly by Futures.io, and I'll tweet it out. Look for my Twitter at twitter.com/FuturesTrader71, and you'll see it come through. Make sure you follow in order to get whatever information is being sent out. Good luck today, and I'll catch you tomorrow morning. Take care.